Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 1st of August. All right, now, just to start the new month, not a lot going on, right? And you might think that sucks, but it doesn't. It actually means the market is waiting and anticipating the next move, right? So we can sort of get on top of this. And it really comes down to looking for the next sort of best trading opportunity, right? And when you look at the charts, right, we've got some great trending instruments here. On the global markets, obviously the dollar index down, euro up, gold's coming into a bit of a, an area where it's going to break out like a pennant formation. Oil's starting to make a little bit of a move higher, and the equity markets, US equity markets, still streaming topside, and Bitcoin there just moving up slightly higher. Now, if I come over to the FX markets, right, once again, pretty much the same sort of focus. As I was saying yesterday, euro and sterling, dollar Swiss and the dollar index, these pairs are the best trending pairs. The rest of the other ones are sort of banging away mid-ranges, right? So dollar yen, Aussie, dollar CAD, Kiwi. Now, it doesn't mean there can't be opportunities on those instruments, but the other four, you've got to be looking at those, right? Because that's where the major action's going to be, primarily because you may have the fundamentals working with the technical aspect. Now, if I come back across here and just give you a run through of the sort of the best opportunities today, we've got the RBA rate decision. What time is it? 9, so about 4 or 5 hours away. Now this is a borderline. I don't think they're going to change. No rate change, right? So in this situation, I know it's sort of factored in, but it's not like 100%. That's for sure. If they do change rates, well, if you're looking to buy Aussie Swiss, sell Euro Aussie and sell Sterling Aussie, and that's against the recent trend, right? So maybe a short-term trading opportunity. But to me, where the better opportunity is, no rate change, okay? Euro Aussie should keep going up, Sterling Aussie, Aussie Swiss, and you've got Aussie CAD in here, which is right on close to a support level. And that could sort of break it down and you may get a bigger move there on Aussie CAD, right? So on the Aussie releases, that's my sort of major focus. The USM, or the US ISM manufacturing numbers, right? A good second tier number, maybe third, depending on the market situation. If we get low numbers here, okay, there's some trending pairs, right? It just goes with the trend, dollar down, euro sterling up. But if we got really strong numbers here, then you've got euro and sterling, which are both at sort of critical support levels. Really strong numbers outside the range should see them break to the downside, and you should get a nice, easy trade there. So to me, I'll be looking for high US numbers there. That's where we're going to see a bit of a flush out. If these numbers come in weak, yeah, these pairs will go up and some of them down, depending on how they're quoted, but it's not going to be as dramatic. Right, this could be the straw that breaks the camel's back, so to speak. Okay, and that's sort of where we are, guys. Now don't forget to connect the dots as we go forward here. Let me just change that pen color. Right, so just keep an eye on the US equity futures as you go through the Asian and then into the European sessions. See if there's any clear bias here with daily change, and see if that rolls into the major currencies. At the moment, right, we've only just sort of changed over. There's not much clear direction there just at the moment. Right now, for those traders looking for a bit of an update on the data, okay, the expected numbers. So as you can see, the RBA cash rate, they are expecting a higher, well, a change. I mean, I haven't actually got any of these right for a little bit. Well, I'm still going with no change, right? There's a huge amount of political issues. All the rate hikes that have already been done haven't really impacted yet. They are impacting and the data's weaker. So why crush the market is what I'm thinking. Now, then you come down here, you've got the ISM data here. So have a look through that as we go, and keep an eye on the ranges. Obviously, the expectation and the range, they're the two key aspects. So if the data release, okay, comes outside of the range, well, that's where you may get a more significant move. And keep an eye on those construction spending numbers there as well. They're well worth a look. And it wouldn't be the first time that the JOLT job openings number has impacted. I haven't seen it for a bit, but you know what? the US market, when it gets starved of oxygen, and what I mean by that is clear directional trading opportunities, they jump on anything, right? So the ISM manufacturing numbers for me would be the best. Construction spending and an outlier number there. The JOLTS job openings could be worth checking out as well. All right, guys, that's it from me. We've got, like, as I said, really good trending markets. You want to sort of make sure you're paying attention, because if we get the data lining up with some of these instruments, we are going to get some nice moves. Okay, the trend is your friend. But I tell you what, if the trend gets a smack in the face, then euro and sterling could be a nice little clean out to the downside. All right, guys, that's it from me. Have a good day. All the best. Cheerio.